Hi, this is Jim Jubak. A new baseball shirt, new minor league shirt for baseball season. This is the Aberdeen Black Cats. Last year they played in the Pacific International League, was 1918. They played in what was then a really tough league, composed a lot of mining towns, wobbly teams. Anyway, I've been harping on the coming recession and listing buys. People have asked, well, what should I sell? So we're going to talk about that today. If you'd like to see some of those other things about recessions, etc., you can see some of that on my free site, jubakpicks.com, and also 3 portfolios. Or you can see all of it, including 10 recession stock picks to buy on my jubakam.com paid site. And you find links to both of those down below. If you like this video, please like it. Subscribe to this YouTube channel. Topic today, 3 recession sells. This is really just my first tranche of things to sell. And the thing that links them all, and the reason we're starting here, is that I think what you want to look at is consumer discretionary stocks, stocks where people have a lot of choice about whether they spend their money. And I'm particularly interested in discretionary stocks where people have a lot of choice about, well, other things to buy in the same category at perhaps a lower price. So first one we're going to talk about is Starbucks. As you can see, this hasn't been a great year for Starbucks. The stock is down about 26% year to date, a lot of them in the last month, 22.84%. What's interesting to me about Starbucks is despite that decline, it's still trading at, well, a pretty average PE, trailing 12 months, about 23 for the market, a little elevated for the market as a whole. But if you're thinking about this stock maybe headed for a decline in revenue or a decline in earnings growth, that PE is going to be deceptive. The reason to start with Starbucks is that I think it's kind of like a poster child for this whole consumer discretionary problem in a recession. People have a lot of choice for where they go. They can also spend less at Starbucks and get slightly smaller. They can move down the line. You can get Americano, tall Americano for $2.95 instead of paying $4.75 for a flat white. In a time, if people's incomes start to feel a little stretched, if people are worried about saving more because their job feels a little, people can have a lot of options. They can go to other coffee shops, they can get downgrade coffee, they can drink coffee at home. All this puts downward pressure on Starbucks. This is a stock that I would sell before the recession, which is now sort of looming out there on the horizon in maybe last half of 2022, early 2023. I'd get out of it now. We've had a little uptick. Stock Next reports on the 3rd of May. A good chance that it's going to say something sort of disheartening about the future. Okay, second stock to look at in this category is Lululemon. This is a maker of yoga pants, workout pants, sweatshirts, now shoes, all kinds of gear. As you can see, also this has not been a kind year for this stock either, although we've had a pretty decent recovery, partial recovery in the last, say, week or so. But we're still looking at a stock that's down almost 21% year to date. This is a stock that trades at 47 times trailing 12-month earnings, so that it's very, very susceptible to any kind of bad news. Last time it came out and said, hey, we're having supply chain problems, we're thinking that maybe growth is going to be a little less robust. The stock took a plunge. Next earnings is on the 29th of March. If you're going to sell, I think there's a strong argument to be made in selling before that. This again is a stock that I think going into recession, I really don't want to own. Last one is Netflix. Netflix has, well, pretty much saturated the US market for streaming services, for its streaming service. You can see this stock too really has taken a beating. We're talking about a 37 to a 38% decline. Again, somewhat of a pickup in the last week, but we're still looking at a stock that's been under a lot of pressure. It trades at a PE of 32 times trailing 12-month earnings. We get earnings again from this one on April 19th. Again, I think there's a possibility that they're going to say things about growth that are negative. Not that growth has stopped, but the growth isn't going to be as big as we expected. here's sort of the Netflix consumer discretionary recession problem going forward. Last data that I can find, which dates to September 2020, is that the average US household had 7 streaming services. In a recession, you're going to go out and add more? Probably not. You're going to decide you want to cut back maybe, or do what 14% of Netflix users do now, which is piggyback on someone else's and not pay for Netflix. The problem that Netflix has is this kind of growth question puts a squeeze on margins, because the company has announced that it's going to spend a bundle of money to compete with Disney, which is going to spend $20 billion on content. So Netflix has got to go out there and spend a lot of money on content at a time when growth may be slacking off. I would look to sell the stock for the recession. I just don't like owning this kind of consumer discretionary problem in this kind of environment. So those are my 3 stocks in this first tranche. I've got a kind of ongoing project on my paid site, jubakam.com, where we looked at 10 stocks that you might want to buy for the recession because they'll hold up better, or they've got something that leads me to think that they would be good stocks to hold during this period when the economy is getting kind of crunchy. But this is only the first 3 stocks, first tranche. Looking at other sells. We'll be doing more on the paid site. So if you'd like to read that, hey, subscribe. You can find a way to subscribe down below. There's a link to jubakam.com. You can also get some of my stuff, not all of the recession stuff, on my free site. That's jubakpicks.com. One of the advantages is that if you become a member of Jubak Picks, which means you get the free alerts, and you just give us your email. It's still free. But you'll also start getting offers for 20% off for the paid site. So hey, it's a way to go about testing out my stuff as well as seeing whether the discount appeals to you. Anyway, if you like this video, like it, subscribe to my YouTube channel, get more notification for other videos, and I'll see you next time. Thanks a lot.